addressing America's housing supply and affordability challenges is something we should be for and we should be advocating and working towards with our real estate partners, with legislators at the federal and the state and the local level. I think it's something that we all, as members and pieces of this real estate puzzle and ecosystem, we have a real duty to work towards some of those.
Hello, everyone, and welcome back to Keys to Real Estate. Well, May holds a lot of opportunity for your business this year. You know, there are moments in an industry where things are just moving fast. A lot of noise, a lot of decisions, a lot of directions things could go, and not a lot of clarity yet on where they'll land. And right now, housing policy is having one of those moments. So today, I'm joined by Kevin Cameron, VP and Head of Government Affairs at ALTA, to help us make sense of what's coming out of the White House, Congress, and the courts, and why it matters so much right now. What struck me in this conversation is just how much is being shaped in real time. This isn't one of those seasons where we sit back and wait to see what happens. So as you listen, I want you to keep one idea in mind. This is a moment for engagement, not just observation. And if you're looking for a way to stay dialed in on what's exactly and actually happening on the ground, we've also launched our new Housing Inventory and Attainability Watch. And it's something we'll keep current for you as these changes unfold. Because May really is shaping up to be a bit of a power month for our industry. A chance to understand what's coming, and if we choose to, help influence it. So let's get into it. The presenting sponsor for this season of Keys to Real Estate is First American Trust. First American Trust redefines banking for title and escrow companies. They offer innovative solutions that integrate banking functions directly into title and escrow software systems, enhancing operational efficiency and safeguarding financial transactions. At First American Trust, you have direct access to a personal relationship manager who delivers answers in real time. First American Trust is also recognized as an elite provider for the American Land Title Association. As a wholly owned subsidiary of First American Financial Corporation, they have roots in real estate tracing back over 135 years and is the only bank owned by a title company. With deep roots, advanced solutions, and a commitment to real relationships, they are setting a new standard for the industry. The future of banking for title and escrow starts with First American Trust. Visit firstamtrust.com to learn more. Kevin Cameron, welcome to Keys to Real Estate. We're so happy to have you here.
Thank you so much for having me. I appreciate it. I'm excited to be here. Long-time listener, first-time caller.
Right. And I'm a longtime member. We just had to get you here because there's so much going on, like trying to report on this right now, trying to influence right now, and just stay fresh and current on everything that's going on. Housing policy seems to be the new belle of the ball, which we're thrilled about.
It does. It's an exciting time to be doing this work. I come from a political background working on campaigns, and cost of living and housing has always been a top issue for voters. But I think this is a Congress over the last couple of months in an administration where the rubber's really hit the road. And it's really a time where we've been busy. Housing has been a big piece of the conversation. So lots to talk about. So I'm excited to be here and kind of break it all down, at least where we are at the current moment, because things are changing quickly.
They are changing quickly. So yeah, it's like drinking from a fire hydrant, and a different one a couple times a day some days.
Some days the flavors change.
All right. Well, let's get the people the information they need. I want to kind of go all the way around the horn with you, but let's start with the White House. You tend to see presidential candidates talking a lot about these issues. You tend to not hear so much from them when they get to the White House themselves, but this president's been a little different. Let's talk about what he's been working on lately.
Yeah, sure. So I think this president has definitely he ran his campaign and came into administration with the purpose that things weren't working and we're going to fix them. And I think cost of living is one of those things. People across the country, no matter if you live in a city, if you live in a rural area or anywhere in between, things are very expensive, and that includes housing. I think as this has been a conversation for a while, but this is something that the administration and Congress have really taken head on, or attempted to take head on. And I think we are learning, and the president's relearning as the second term is getting underway, that legislating is hard. Legislating takes time. It is not quick fixes, but the benefit of being the president is having executive order power. So as things are moving a little slower in the legislative branch, the president can move within a confined space, but move unilaterally to be able to make some changes and make some difference, to fulfill some of those campaign promises that he made to voters in November of 2024, which seems like an eternity ago, but it wasn't. So just recently, and we'll talk a little bit about, Congress is working on some housing stuff right now, and they're a little bit gridlocked on how to solve it. But in that very vein, the president a couple weeks ago released two executive orders focused on housing that are really a great step in the right direction. The first has to do a lot with supply and removing barriers to home construction. I think many of your listeners are real estate professionals, and we understand that supply is a real problem here across the country. And that is one of the reasons, but a main driver of why prices are so high. We simply just don't have enough housing in this country, and we can't build it fast enough. And so the president and his administration took some steps to pull some federal levers that they have to reduce barriers to construction and allow construction firms and builders across the country to build a little faster, whether that be reducing regulatory red tape, reviews, things to move the ball a little bit forward. And I think we are short, depending on whose estimate you look at on any given year, millions of units of homes. We at ALTA, and I know the industry, are supportive and need to be supportive. This is something I tell our members all the time, that moving in the right direction and addressing America's housing supply and affordability challenges is something we should be for, and we should be advocating and working towards with our real estate partners, with legislators at the federal and the state and the local level. I think it's something that we all, as members and pieces of this real estate puzzle and ecosystem, we have a real duty to work towards some of those. And I think a lot of the pieces of this executive order are really going to help in that. The second is focusing more on mortgages and mortgage credit. There's a nexus here with the title industry that we found really exciting, and it's the emphasis in this order on working on digital closings and electronic mortgages, something the title industry has been championing for years and years, and it's really great to be able to see an administration focus on and be able to say, yeah, we're for that. We've been doing that. We appreciate your focus on this because it is making things better. It makes things faster. We learned during COVID, a lot of this can be done electronically. During those years, we were kind of forced to get creative and do some of these things remotely and electronically, but some of them work, and being able to embrace some of those technological changes and work through those things and promote digital closings, the use of remote online notarization. As technology grows, the opportunity for criminal activity and things like that also grows. So making sure that we're doing things responsibly and in a safe and secure way, because at the end of the day, when it comes down to is when you're closing on a home transaction, this is arguably one of the largest purchases anyone will make in their lifetime. And which is one thing I love about being able to work with the title industry so closely, is our members take their job of facilitating this transaction safely, securely, so that folks can buy that first home or upgrade that home when they've had their first or second child, or downgrade that home when they're empty nesters. Is really being part of those big changes in life and making sure that it can be done safely and securely.
Absolutely. And I was encouraged to see right after the Senate acted, which I want to put a pin in that. I want to come back to that. But to see the White House immediately sort of come out as a first mover before anything else had even happened with harmonizing the bill. And we want things done legislatively too, but that
Sure.
the quicker work that can come as a result of a couple of executive orders, I found to be encouraging. And to your points, I thought that focusing on supply, that's our closest thing to a silver bullet we have, which you noted it takes a little while to build out of that, but we've got to get started or it'll never happen. And then the second, honestly, we get so much, rightfully so, pressure to evolve with the times, to bake costs out, even if that cost comes out only from the risk side of the equation. And I think legislators especially are starting to understand digital and E doesn't mean slapdash and less responsible. In fact, in most cases, there's more baked in. So it just seems like we're finally getting some of our electeds are starting to dance together on this issue instead of being just sort of fractured and it doesn't make sense. So do you get the sense that people are starting to really link arms and advance some of these agenda items together?
Yeah, absolutely. I think it's working together and working where you can. I think this bill in Congress is a great example of it. It's working across the aisle too. I think you hear, and you can turn any news channel on any time of the day these days, and it looks like our country is far too divided, too crazy. we'll never be able to work together again. All hope is lost. But I think this is one of those great examples where there is work still being done. And I know this is not just at the federal level, it's at the state and local level too, is there are still legislators at all levels of government who are committed to working together and working on solutions and doing what they can. I think taking a small step where you can, like as this bill is working through Congress, the president's going, you know what, I can take some executive action here and I can move the ball forward an inch while we're waiting on that, 20-yard pass to move things forward. And I think we have to be for small advances and big advances. I think we all want to see that big, huge housing package pass that's going to revolutionize the system and finally get us out of this mess. But I think it's those small steps moving in the right direction that we need to celebrate and encourage as well.
I couldn't agree more. A couple of weeks ago, the courts got a little bit more involved in things
Been a
too.
busy time.
It's a busy time. Let's talk through what ALTA thinks, knows, and feels about that one.
Yes, sure. So I think anyone in the title industry by this point, hopefully, is very familiar with the six letters FinCEN, the Financial Crimes Enforcement Network, and the residential real estate rule that we've been preparing for, working on, making changes to over the last several years. I feel like we've been talking about this for a long time. And we got to the end of last year. We were able to get a delay in the implementation of the rule for more time to prepare. And then it went into effect March 1st. And then, as you alluded to just a couple weeks ago, about 2 weeks in, court in Texas vacated the rule. I'm not a lawyer, so don't take this as legal advice, but the court ruled that it was too broadly drafted, putting these routine, lawful real estate transactions, then not being traditionally financed, targeting them all as suspicious activity when they're very much used in common and legitimate transactions across the country every day. They also had an issue with nationwide, no real justification for nationwide reporting. I think many title professionals across the country have been dealing with the geographic targeting orders over the last several years since 2016, where they are targeted to certain areas where FinCEN feels that there is a greater likelihood of criminal activity happening. But this expanded it nationwide, and the court seemed that they didn't have the justification for that. And then I had a reading of the underlying statute that said that FinCEN kind of overstepped their boots a little bit. So we're living in a world right now where reporting has stopped. Shortly after the court ruling, FinCEN came out and said that title professionals, as of right now, we are recording on the 30th of March, you do not have to be reporting. And there's no liability if you're not collecting information right now for transactions. But as with anything, especially in the administration or in the courts, it's a very fluid situation. I think right now guidance is clear, but FinCEN or movement in the courts could change that. So we've really got to be on top of our game. That's what we're focused on right now at ALTA, is making sure that we know the latest and that our members can get the latest update. And should there be a change where reporting needs to go back in if this ruling is appealed, making sure that this is not a light switch that can be turned right back on. So I think what we're doing right now is trying to take advantage of this inflection point and gather as much information as we can. To your point about the light switch, we know that this has not been going particularly well. We knew that there was going to be a learning curve, and we told FinCEN this, and we told members of Congress, as I've had many a meeting talking about, this is where we're at. This is what the rule is asking for us. It's a lot. And if you're not willing to pare it down and kind of work with us here, this is where it's going to go. So now we know it started off. There's a lot of transactions that were reportable. There's a lot of information that was being collected. It's taken a lot of time and a lot of effort from title professionals across the country. So what we're trying to do now, and ALTA has just launched a FinCEN experience survey to try and get to quantify some of this, is we now have 2.5 weeks, almost 3 weeks of data when folks were reporting. Let's take that, let's quantify it, let's bring it to members of Congress and say, you were with us before and we got the delay. Here is the experience of title professionals on the ground, your constituents who are working in your districts. And we'll get to the importance of advocacy and kind of telling that story. But here is some real data of the experience. And we need some changes here. A court in Texas ruled that this is too broad and too cumbersome. We agree. Let's make some changes here to make this work and make the burden on title professionals not so overbearing, where it's really from a time, a cost, just an effort perspective is not overbearing.
A liability for that NPI holding it, over collecting.
Right.
There's so much the hostility that we faced in those first weeks of live that I don't see abating. It's not like you're going to have the same folks over and over that eventually get used to it like they do a closing disclosure form or a loan package. It's this new crop every time and they go, what the heck could you possibly want this for? And what's ironic to me is crypto in real estate, fine, not suspicious at all. But cash with an entity, well, that is inherently suspicious. I mean, it's incoherent, Kevin. Sorry to go
No,
off on that, but it is.
that it leads to the, as title professionals in the title industry, we've been dialed in on this. We've been concentrating on it, focusing on it, because we knew we were going to bear the brunt of this. But I think it's the lack of education as well across the broader industry and for people buying homes. They don't understand, especially if you've purchased a home before or you've refinanced a home before, have your parents put their home in a trust and now you're doing it because you have been told it's a great estate planning tool, which it is. Now you're being asked to give all this information that nobody warned you about or didn't happen when you bought a home a few years ago with that same family trust or that same LLC. It's confusing, and I think it's adding to the headache that title professionals across the country have to deal with, because it is not just the collecting of the information, but it's explaining to the individual why you're collecting this information, where the information's going, why they have to comply with you before you can even get to the information part.
Right. And for agents right now, again, date stamp, the afternoon of the 30th of March, agents are in such a limbo because FinCEN has said, okay, don't report and no penalty for not reporting. But to our point about the light switch, let's say that flips back on. There's a stay and hey, we're rolling again with this. Well, if you haven't been collecting, like nobody's quite sure about that gray area in the middle. But the flip side of the argument too is if I come into my closing now or in advance of the closing and say, oh, hey, guess what? I don't need this information, but in case I need this information, I'm going to go ahead and get it from you with no authority, but I might have to come collect it later. It's just a practical mess out there right now, even though we're not collecting and reporting right now, but limbo is pretty bad too.
For sure. And I think that's why we made the point that I said earlier to FinCEN that if things change and dynamics change, whatever have you, it cannot be expected that this is a turn the switch right back on and things go back to when they weren't working that well before. I think it is a prime opportunity to learn from what we've been doing, like I said, and ask for changes to make it less burdensome. I mean, looking at things like, can we add a dollar threshold to these? What doesn't make sense to have a $0 transaction? Or transactions at the end of a foreclosure, or when you are putting your own home into a trust for estate planning purposes, looking at common sense ways that this can be narrowed and tailored to take some of that unnecessary burden
And
off
help
of
them
title
find what they're
professionals.
actually looking for instead of the whole world of
Right. And
cash.
I think that's the I don't think anyone in our industry that is not a criminal would say we are for money laundering in real estate. We do not want criminals to be able to utilize real estate assets for money laundering. We support the ultimate goal. It's just making
Yes.
sure that the ultimate goal doesn't so overly burden title professionals. And especially, I think the one thing that we keep letting lawmakers know and checking the reality on this is that so many title companies across the country are small businesses. They are not, I think there's this misconception that everyone is a huge company that can handle reporting like this and kind of absorb it into a bottom line. That is not the case. The majority of title companies are small businesses that these sorts of extra burdens on them do matter. And it's tough to have those conversations. That's why I think it's so important that folks across the industry get involved with what we're doing to be able to tell your story. We always talk about, I know we're going to talk about this later on, is that folks are their best storyteller, and being able to talk about what you do in your own business and how something like this is impacting you is really the best way to do it. And I'll make a shameless plug for ALTA's Title Action Network, which is a network, an individual network of title professionals across the country that we call to action in moments like this to be able to reach out to lawmakers at the federal level, but at the state level too, on various issues, to be able to make the case to your elected official when you're living in a district. It's very easy. We use a system to be able to geo-target on who you're talking to, but being able to make the case to policymakers at all levels of government that this rule that we're talking about now, or a bill in Congress or a bill in the state legislature, is going to have a negative impact or a positive impact on the work that I'm doing for home buyers in our community, and this is why you need to pay attention to what we're saying about it.
I couldn't agree with you more about TAN. And, I think there are a lot of people who maybe they're not the agency owner, or maybe they're not in senior management. Maybe, they're just working in title, closing, escrow, and they don't know their elected representative. They don't know exactly what to do. But this calls to action through the Title Action Network make it so easy to make your voice heard. One of the themes I wanted to have for our conversation is about how much electeds do want to hear from constituents. And that was something that took me a long time to really get,
Sure.
that I wasn't being a problem, that I wasn't being an egg. They really do want the information and the interaction. And so TAN, if anybody within ear or eye shot of us is not signed up, they have to sign up, because that is just the single easiest way to have some impact,
Yeah,
regardless of what your position is in the industry.
absolutely. It takes 2 seconds. alta.org/TAN to get signed up. It takes 2 seconds, and it is easy. And I think I want to talk about a point you made. You don't have to be the CEO or in senior leadership to make a difference. That is such a misconception about advocacy work at all levels. It really is anyone who's willing to make their voice heard and make a statement on the behalf and talk about the work they do. I think that's the biggest misconception about advocacy and being an advocate is you have to have all this policy network or be an economist and know how all these laws and things. Not true whatsoever. The best way to advocate for any policy change is to be able to tell a story about how it'll impact you, how it'll impact your business, or how it'll impact the people you do business with. And I think what positions our industry so well to tell our story is that we are literally the people who make home buying possible. And we are facilitating the American dream for people who elect these elected officials. My job in Washington is to be an advocate for the industry day in and day out, but there's only so many times that a lawmaker or their staff wants to hear from me. It is so much more impactful when they can hear from someone in their community that's doing the work to hear the impact they are having on the people that vote for them at the end of the day. I think that's having a representative democracy is one of the great things is you get to hold them accountable and tell them things, inform them about how things are impacting the community that elects them to office. And that is a much more profound story to tell.
It absolutely is. I couldn't agree more. Another thing that people are having to deal with right now, and for a while, all day, every day, is issues relating to fraud. It seems like there's some new way to steal other people's money every day. I'm gonna put my quarter in and let you talk about what all's going on that front.
How much time do we have?
Haha, right.
Unfortunately happening more and more. A title professional I was talking to a few weeks ago, really, we were talking about why is it happening so much? Why is it continuing to grow? And it came down to one simple thing: fraud is profitable. If you can perpetrate a crime, it is profitable. But I think it is for that reason, because it is so prevalent. Policymakers are focused on it, rightfully so, and I think, at least in my time, more now than ever, I think fraud has become such a conversation in a whole host of areas of the economy and the world and the country. But I think one that we have such a great story to tell is around real estate related fraud. And I would argue it's one of the types of fraud that folks don't talk about enough in the media. I think absolutely all fraud is bad, but I think when it comes down to being able to steal someone's home or strip their home of their equity or sell a piece of vacant land and redevelop it, I think it is so grotesque and large and on such a large scale that it's something that we need to talk about more. And it's something that ALTA is really focusing on, talking to lawmakers at both the state and the local level about it. Just in the last couple of months, Congress has had a few hearings on fraud. There's been the establishment of a bipartisan Stop the Scams caucus. The White House has created a new division to look at fraud. A new task force, excuse me. They've also created a separate new division in the Department of Justice to deal with fraud. So it is something that's really, really on the top of policymakers' mind. And it is such a great opportunity for the title industry to talk about the work that we do to prevent fraud from happening at the closing table beforehand, but also talk about the ongoing protection that title insurance provides against fraud. I think that talking about the work that title professionals do on the front end, I think is a thing we don't focus on enough, frankly. Talking about the best practices and the training and the education that title professionals get to be able to identify fraud and identify where fraud might be happening and kind of be a little more hesitant to move forward with a transaction if they sense something or see a red flag that they should kind of look into once or more. And then also the curative work. I think the curative work that title professionals do, I think you oftentimes, and we can go down a whole rabbit hole on this, you can oftentimes, you hear that, oh, it's just a simple search of the public records, then you write a policy. And that is simply not the case. And I think fraud is a great way to explain that. The work that folks do to be able to analyze documents and be able to see buyers and sellers face to face and kind of stop those things from happening. But at the same time, a fraudulent document or bad actor isn't waving a little red flag. And I think it's a great explanation of why the two parts fit so well together. The curative work done before closing to make sure that everything is discovered and handled beforehand, but then that ongoing protection for that things you can't find, that you can't identify in the public records. And it's prevalent, but it's also expensive. It's costly. The FBI in their annual IC3 report estimated that about $173 million in real estate fraud losses were lost in 2024, which is a huge number. And, but I think to bring it kind of down to a more individual level, ALTA's done some data work over the last couple of years to really kind of quantify these numbers. And fraud accounts for about 21% of claims losses for the title industry, which is not a small number. An even more jarring number to my mind is how much the average fraud claim costs. So the average in a purchase transaction is $143,000. In a refinance transaction, it goes up to $207,000. This is such a great example of when people say that, oh, you don't need title insurance. Oh, why get it? Why it's an added cost. It's unnecessary. You'll never use it. Hopefully that title professional who did all the curative work before you close it, hopefully they did a really good job and there aren't any glaring issues that you need to. But when there are, or if fraud happens to you, I don't think the average American family has 143 or $207,000 hanging around to be able to deal with this issue, defend themselves in court, and be able to protect their home at the end of the day.
Oh, heavens, no. And at a time, from an industry perspective, at a time where we're being asked to kind of speed everything up and put in less oversight or let the machines do it or whatever. When I started in the business, sorry, but when the earth was cooling, fraud at that time, the stats that were out were 1% of claims. And so now we're up to 21%. And so we're being asked to back out more and more and more expense, time, all of that. But this threat keeps just going up crazily.
Yeah, and it's very hard to detect, which is why the ongoing protections of a title policy are so important that you can't know that fraud's going to happen. And I think one of the other great things that the industry has kind of innovated over the last year or so are some new endorsements to policies to allow
Let's talk about
for
that.
added coverage. So the ALTA 49 endorsements basically allow for folks who have a regular title insurance policy who want to protect themselves against forward-looking fraud, protect themselves against seller impersonation fraud or something happening in the future. They can add that onto their existing policy to be able to cover themselves. And I think, as you talk about going from 1% to 21%, it is unfortunately growing in prevalence. And I think we are policymakers we talked about are focused on this and trying to find solutions. But I think until we can bring those numbers back down, being able to protect yourself against those risks is really important. So I think it's a really great innovative solution to be able to offer to homeowners to be able to add this ongoing protection against fraud.
I do too, and I hope agents are explaining it, promoting it, encouraging people to have the protection. I'll just leave that at that. But to be able to offer some protection, even against a deal that, didn't happen yesterday, I just think that is a wonderful solution, and I'd really like to see agents being proactive with that.
Sure.
Are
And
they?
I think it's one thing to be able to be notified. And I think, there are recorders offices around the country who offer these services for free as well. It's one thing to be notified, but then what are you gonna do about it?
The horse has
Who's
left the barn,
right? Who's
right?
who is going to who's going to help you? Who's going to help
Right,
me
exactly.
save my home? And I think when you explain the ongoing coverage, whether it be a homeowner's policy of title insurance or adding on this Alta 49 endorsement, being able to explain that you can kind of breathe a sigh of relief that not only will somebody detect it if it happens, but then we'll be able to fix it and keep your home in your hands, not have it be turned over to some fraudster. I think it's the other thing is that we keep talking to lawmakers about is the necessity of title insurance in a real refinance transaction.
Right.
But if you go back to the numbers I just talked about, it's more expensive in a real refinance transaction, and oftentimes more prevalent. And I
Yeah.
think as hopefully over the next couple of years rates start to come down and people start to refinance, I think it's something that we need to be really on top of, is the availability of fraudsters to take advantage of the refinance market. And a hypothetical story I always tell a lawmaker is, imagine someone filing a fraudulent deed against someone's home and then stripping all their equity from it in a cash out refinance, and they had no idea it ever happened. A home is the number one wealth generator in the country that people use to pass down to generation after generation. And imagine that being stripped out from under your nose without ever knowing about it, and then not having a way to rectify it.
Right. Well, and I'm glad you underlined that surprising distinction between refis having a higher balance of a successful fraud per transaction than do purchases, because I think a lot of people would find that counterintuitive. I love that data backs it up. And it makes me want to ask you about the next question, which is what's going on with AOLs and some other products that have gotten some attention over the past couple years?
Yes, sure. I mean, I think it's a direct line to talking about these unregulated alternatives, attorney opinion letters. Just zooming out for a second, looking at how these products operate, it is a search of the public record. An attorney signs off and says, "Yep, didn't find anything. You're good to go." But as we just talked about, you can't find fraud in the public record. There's no even a little yellow flag saying this is a fraudulent document. You should probably look at it twice before you sign that letter. Nor is there the ongoing protection of a title insurance policy if something does happen or if something does pop up that was missed or not able to be discovered. So I think when you're having these fraud conversations, it's something that we're talking to policymakers about right now, is that these products, not only are they inferior to title insurance in a lot of different ways, you are putting home buyers and lenders at real risk of real dollars within the fraud conversation. So I think it is the focus on fraud is given us such a great new angle to look at these products and make sure that people understand what they are buying. And I think you see a lot of insurance commissioners across the country starting to take a second look. We had the Tennessee Insurance Commissioner last year and the Virginia Insurance Commissioner issue administrative letters on this topic saying, hey, there are differences between an attorney opinion letter and title insurance, and consumers need to understand what they're buying, and they shouldn't, as whoever's selling these products shouldn't be conflating the two for the consumers, because they have real distinctions, and a misunderstanding has the opportunity to be really detrimental to home buyers. Circle back to the numbers we talked about a few minutes ago.
Yeah, no, exactly. And I don't think that everybody necessarily should be required by law to buy insurance. I could talk to you at the bar about that later, but
Right.
there is, and I do think that it's worth informing that there is a difference between assurance and insurance. They're two different things. And as long as consumers really understand what it is they do and don't have, then we're just having a free market conversation,
Right.
right? Great. But absent that education and then awareness, then that you start to, in my opinion, get sideways real quick.
Absolutely. And I think making sure, I mean, let's be honest, if you're, especially let's just think about a first time home buyer, for example, or a first time refinancer. The process is difficult and confusing enough as it is. To having to be able to kind of discern between these two products that you don't really understand the difference to. If somebody's telling you, use this one product, it's cheaper and just the same, no problem, without doing a little research, it really leaves them at risk. And I think that is one of the big things that we are pushing to insurance commissioners and to policymakers, is that unlike title insurance, these products are really unregulated. There is no one watching how they're being sold, what's being said about them, and how consumers are, to your point, kind of understanding the differences between the two products. Because unlike title insurance, which in each state is comprehensively regulated, to make sure our policies, our rates, and how we're marketing them is sound and we're not scamming, for lack of a better term,
Absolutely.
home buyers, there's no real anyone watching out for what these products, how these products are being marketed, and what consumers are learning about them before they, to your point, make a decision about how they want to protect themselves or not. And I think that is, a free market conversation. I think that kind of goes to one of the big pieces of legislation in Congress that we're supporting right now, which is a bill called the Protecting America's Property Rights Act, which simply says a federally backed loan needs to utilize a properly regulated financial product Doesn't necessarily need to be title insurance. Now, you and I would make the argument to anyone, as you said, that that's the right option, but we do live in a free society. We do live, people are able to make their own choices, but they should understand the choices, and there should be someone making sure that they are not being convinced to buy something that isn't in their best interest unless they understand that. So it is something that we're going to be promoting this year at the ALTA Advocacy Summit. It has 20 co-sponsors on the House of Representatives now. We're really excited about that. And bipartisan, as we said, there is still bipartisan work being done, both Democrats and Republicans. But the simple idea that consumers should understand what they're utilizing to protect themselves and understand and not have to worry about digging through all the legalese to really understand what's being offered to them.
Completely agree. And I'll tell you what, for today, we need to leave it here because we try to keep this short enough that people can enjoy it on their lunch hour real quick and on the go. But when we come back next week, what I really want to do is drill down into what is going on in Congress. You guys have your advocacy coming up very soon. So I'd really like to get more into the nitty gritty of how people can help really make a difference while this stuff is still being decided, so that they can influence what goes on instead of just grumble and react after it has happened. Is that fair?
Absolutely. As I said, we have a good story to tell, and now we've got to go tell it.
I'll see you back next time.
Perfect. Thank you so much.
Well, what I hope you take away from this first conversation with Kevin is just how much really is in motion right now and how quickly it's all evolving. There's a tendency in our industry, if we're honest, to react after the fact, to wait until something is finalized and then figure out how to live with it. But listening to Kevin, it's pretty clear we're not in one of those moments. Rather, we're in a window where the conversation is still open, where policymakers are actively trying to figure all this out, and when they really want input from people who are doing the work every day. And so that's going to lead us into next week and part 2 of my conversation with Kevin. And next, we're going to talk about what it actually looks like to step into that, to show up, tell your story, and be part of shaping what comes next. And so if you're thinking about getting more involved, we'll show you a couple of different and impactful ways. We've linked to information on ALTA's Advocacy Summit and to the National Settlement Services Summit in today's show notes, so you can explore both. Maybe go to one to help shape what's coming next, and then the other to make sure you're ready to really operate profitably in the new realities. So I'll see you back here next week for part 2 with Kevin Cameron from ALTA.